The year ahead promises to be another significant one for the global and local economy, meaning Australian business leaders will be navigating a year of change and challenge. I'm Julia Parsons, here to present insights and outlooks from the team at Macquarie on the issues that will matter to your business in 2023.
2023, I think, will be a year of two halves. In the first half, as central banks continue to hike and keep interest rates at a high level, I think we are going to have a recession in a lot of countries. But I do think that as inflation comes back under control, central banks will be thinking about easing by the end of the year, and that should set us up for a nice long expansion starting in 2024. Central banks are trying to thread the needle. What they're trying to do is slow economies down to growth below trend, but not cause a recession. And by doing that, they're hoping they can bring inflation back to their targets. Australia is definitely at risk of recession. Our central scenario is that we can avoid it, but it's touch and go. At the moment, it is really difficult to hire staff. It's a historically tight labour market. The RBA is slowing the economy. I think it's going to start biting in the first half of this year. But my guess is you won't see a really material weakening of the labour market until the second half of this year. To get inflation back down, the RBA needs to engineer a looser labour market. So the reason they've hiked interest rates is to slow economic growth. That will probably mean that unemployment moves up a bit over the next 6 to 9 months. But that is a necessary thing to bring inflation back under control.
Australia's commercial property sector is expected to perform relatively well in a global context in 2023, supported by strengthening population growth and expectations that cash rates may not peak as high as other markets. But our capital markets are exposed to global macro events, which may dampen returns and transactions in 2023 to some degree. Any pricing weakness may create opportunities for those investors with liquidity and capital to deploy. Sectors with weaker fundamentals, such as secondary offices and properties with elevated leasing risks, are most exposed to volatility and may require equity contributions at refinancing. Through cycles, Australia's favourable demographics should support commercial property returns, liquidity and ongoing institutionalisation of rental housing segments such as build-to-rent, manufactured homes and student housing. Generally, real estate investors with more equity and strong relationships with lenders appear better placed to deploy capital and work through refinancing events in 2023.
As the RBA has rapidly increased interest rates, house prices have fallen rapidly. In fact, in Sydney, we've now had the fastest fall that we've seen in the last 40 years. Unfortunately, with interest rates likely to move a little bit higher and stay higher, I think there's going to be more pain. But by the end of the year, my guess is that things will be stabilising, and hopefully we can then resume a new cycle in 2024. The RBA is in play, they're going to hike a little bit more, interest rates are high, and that's going to be a really big impact on the property market. Over 2022, the RBA increased the cash rate at the fastest pace in many decades. We think they're getting near to the end of that tightening cycle, but much will now depend on what happens in the economy. If the economy remains strong, they will have to hike more, but if the economy slows as we expect, they may be nearly done. At the moment, the most likely thing is the cash rate goes up a little bit more and then stays there for a long time. But if the economy does tip into recession, it is likely that the RBA will be cutting again by the end of this year. In many ways, Australian inflation has been following the rest of the world, and it looks like it's now peaked in both North America and Europe. So I think that means that we're likely to peak soon. In headline terms, as energy prices fall, and as the big shock from last year drops out, I think headline inflation will come down quite quickly over the first 6 months of this year. But in underlying terms, with a very tight labour market, I think it's going to take some time. The main impact from inflation is on household balance sheets. Every time you go to the shop, you have to pay more for the things that you're buying. Ultimately, that means that you're taking a real cut in income, and that means that ultimately people will have to constrain their consumption. So the main hit is on the consumer. Energy prices were very volatile over 2022, and my suspicion is that will remain the case in 2023. In the near term, Europe has had a very warm winter, and that has taken a lot of pressure out of natural gas prices. The fall in natural gas prices will probably take some pressure off prices in Australia, but with thermal coal prices still high, we're not out of the woods yet.
We hope these insights are useful to you and your business at the start of another big year for economies at home and abroad. We look forward to keeping you updated on key developments in 2023. And as always, we're here to help support your business goals, strategy, and growth ambitions.